Walker here once again for another video. We're going to be talking about maximizing profits here on today's video and talking about how to go forward with breakouts, risk management, and how to basically dissect the market and to be able to make those great trades. For the people that are just new to this channel, my name is Brenton Walker. I'm the Traders Forex analyst at Traders Profit Club. I've been trading for about 6 years. On the last 3 years, I've been able to trade without any other income. I've been able to be full profitable, and I've been able to use these strategies to help people make a lot of money. I've had a lot of clients, and I've had a lot of students make thousands of dollars using these methodology and strategies I've been able to find out and research and develop over the years, and it's been able to make a lot of people's lives easier. So I want to give you guys this information. I want to show you guys how this can work for you, and hopefully you can use this in your trading strategies and help make a lot of money. So we're going to get straight to it. So yesterday we talked a lot about the consolidation breakout and where to find the entries and exits, and we saw that a lot of the times is usually after a consolidation. As you guys can see that I'm in this position right now with Great Britain pound US dollar. Right now, that the reason why I got in this trade is because we talked about yesterday how there's basically an area where the bankers and institutions like to induce buying and selling into the market, where they like to basically consolidate price before they break out into an other direction. So that's why I'm in this trade right now, just because it is the end of the year as well. I know that the market, for them to make money, they're not going to go to the downside just because they've been short basically the whole year. They're going to try to go to the upside, reversing price to hit people's stop losses, and considerably for them, they're going to take price back. So I'm looking at HSBC, I'm looking at Berkeley's for any investment advice or things that are going on in the markets. I'm just doing my fundamental analysis. I use a little bit of fundamental analysis. I'm not really, doing it every single day. I obviously just look at it from a weekly standpoint to see if the market is going to be fluctuating or if there's going to be any type of huge momentum in the market. So going forth with that, I'm just going to go actually break down today. We're going to be talking about when the market likes to reverse, when those resistance and support areas are hit, and we can just go step by step. I'm going to be showing you guys a little quick preview of the program that's going to be on Traders Profit Club in the near future. We're going to just working really hard to get this to you guys, and we're going to be able to kill it in the markets by showing you how this works. So just give me 1 second. I'm going to bring that up for you, and we're just going to go from there. So first thing that I like to talk about, you guys, is how these methods that I'm teaching you guys are universal. You can work on crypto, but the crypto market, it has a little less history, but it still works the same, right? If you're going to go in the daily, or excuse me, the hourly time frame, or if you're doing the 30-minute time frame or the 5-minute time frame, you can use this same strategy and use the same strategic plan and to be able to profit in the market. So first thing I want to talk about, you guys, is like I said yesterday, we're going to talk about the market setups and what exactly is aspiring the market setups as well. So midweek reversals is the first thing that happens in the market. Usually this happens when Monday, Tuesday, and Wednesday are accumulation days. Thursday is probably a peak formation, and then Friday is when it reverses. When it reverses, based on pushing liquidity towards one area of the market to test prior area. During the midweek reversals, they usually hit psychological numbers such as 000, 250, 500, and 750, something we talk about a lot. And these levels are basic support and resistance for the market makers. In design are shown below. We'll go over example over and over again. So in this segment about the reversal, and Thursdays tested last week highs. So this was previous last week highs. And after I read this out to you guys, I'm going to go back on the charts and I'm going to show you directly how this is correlated with the strategy that I put here. So in this segment above, the reverse of Thursday and tested last week's highs, 110. The market tends to retest levels by touching previous highs, previous lows, and psychological numbers. Each level tends to react based on different market conditions. Conditions such as bullish market, bearish market, or consolidation. Each one of these levels can give you a great factor of where the market will move next. Okay, so that being said, you guys, I'm going to show you a little bit of something that I like to call the secret sauce in my trading strategies. What I like to do is that I look at obviously the beginning of the week. So on this trading platform, it doesn't really necessarily give you the exact weeklies set point, but obviously I know what the beginning and end of the week was, so we can just go by it for every 5 days. Okay, so every 5 days we'll go into the market, and I'll show you exactly how this works. Okay, so this is the 28th, the 29th, the 30th, and then we have, and then we have the 2nd. Okay, so as you can see that this was that Monday where we saw the 28th was basically the day where we saw the market go up into this consolidation area. We saw the head top point, and then we saw that reversal, and then we see the market consolidating once again. I'm going to actually remove this real fast. I see the consolidation area right here, and then it breaks down again, and then it tries to scoop price back up, and then it breaks down one more time. And the reason why this happens, you guys, is that we have to take into consideration that every single time that there is a high of the market, so say that this is the high of this of the 28th of November and the 29th. Okay, so this is the high of the 28th and the 29th. So we're looking at this as the high, possibly the high. So this is the high of the week. Okay, so we can see that the market comes down and makes that huge formation, that huge M formation, where the market comes up. It doesn't have any sustainable structure, so it comes right back down, and then it consolidates, and then it makes that whipsaw pattern. And we talked about whipsaw in previous videos, and I'll show you guys exactly what whipsaw is one more time. Where whipsaw is established when the market is showing huge consolidation, and then it has a huge spike out to one side to stop the market highs and then stop the market lows. Okay, so this is how it works. So the market consolidates for a while, and then it stops the highs, it stops the lows, and then it consolidates, and then it drives price back to previous highs. Okay, so these structures happen because a lot of people are in these trades, especially either intraday trading, and this is a way for them to not be able to make sustainable profit. Because when you have these structures and formations, it's not easy for especially your average trader to understand what these huge volatile spikes are and why do they happen. So I'm gonna tell you guys exactly how it happens. So like in the beginning of this consolidation period, they're basically wanting you to go long, right? Because they're basically giving you time to go into one direction for about a couple days. So you're getting higher highs, but it's more of a range of a higher formation. So this is a high range formation. So it's like, oh, it's going to bounce out, it's going to break out to the upside and test these previous highs. For the average trader, that's what you usually would do. But that's what they want to do. They want to give you a false breakout. So out of this market, they give you a false breakout and inducing you into going into that bullish trap. And then once they give you that bullish trap, then they break down price and hit all your stops that you did when you saw that previous low. You put your stop below this low, and then you put your take profit probably at these levels up here. And you obviously got in the money a little bit. You're excited, and then in a couple hours later, you're already down out of the money. Okay, so this is a huge thing on why the market reverses, on why they have these midweek reversals, is because there's a lot of liquidity being built up in one area. And like we talked about in the segment above, is that midweek reversals are based on pushing liquidity towards one area of the market to test prior areas, right? So then we also talked about how the market tends to retest levels by touching previous highs and lows and psychological levels. So that's what we're talking about in this segment, where all they're trying to do is push liquidity to another level. So we see that this was previous lows. So how market does is that it likes to test previous formations. So we can take this area, and we can see that after they had this huge bullish spike, over 100 pips, this huge spike to the upside and came back down. We want to see that the market is going to test previous lows because the market loves to test the same areas, which it does. The market goes back, it tests these previous lows, and the market structure is again formed around the same area. Okay, and then you see the same thing once again. They do it right after they do it back and back, because people they don't understand that this can happen over and over again. They think, oh, that was the only one time. No. They just open the range a little more just to induce you a little higher. So you see how this range was a little lower than this one? Well, it's the same thing. they induce you to go long, they hit your stops, and then they blow past price, and then they obviously touch these previous lows and even going lower. So this is how the market is working, guys. It works in these kind of whipsaw patterns where the market kind of bounces up, bounces down, goes into one area, and then drops price, because it's really confusing for an average trader. Average trader won't be able to understand all of these elements and understanding all these concepts for the market. Sorry about that. Let me just take this down. Sorry. So I say, good to see you, man. For a beginner, what indicators are really useful? So for indicators that are really useful when you're trading the markets is the 50 and the 200 moving average. Reason being is that whenever you see these moving averages, so what moving averages are, first, for people that don't know what moving averages are, is that it's these two lines that go across the charts. You see them on a lot of other people's chart patterns. It's these two lines that go past the chart, and they have a lot of support and resistance. Right now I'm on the 5-minute chart, so obviously it's going in and out, so it's not really showing that much structure. But I'll go on a higher time frame and show you guys exactly what it is. So usually the 200 moving average is pretty simple. So whenever you're above, let me just remove all these drawings first so we can go forth, and then let me just put the EMAs down there. Perfect. So the reason why I use the 50 and the 200 moving average is because it's a very good indicator to show you where the momentum of the market is. And the 50 moving average is the same thing, but I use it to get either into a trade if it's trending. So if I see a bounce off the 50 EMA and the market is below the 200 EMA, then you know that the market is now in a uptrend. Okay, so whenever the market is above the 200 EMA, you're in a bullish market. Okay, and then whenever the market is below the 200 EMA, like here, you're in considerably a bearish market. So I hope that answers your question on what the indicators that I use. The 50 EMA is a retest level. So if I'm trending and if I'm in a bearish trend and I see the market test this level but it's showing resistance, this is an indicator that the market could just be another short. It's just another buy, or excuse me, another short position to take when you use this. And I use this a lot in my earlier days when I was just trading the 50 and the 200. I mean, a lot of traders only use these strategies where they only, when it bounces off the 200 EMA, they short. When it bounces off the 50 EMA, it shorts. So it's a very easy and simple strategy. It's not 100%, just like nothing is 100% proof, but using this with other formulations that I teach you guys, it's very highly probable, and you'll be able to make a lot of money doing that. So if that answers your question, use the 200 and use the 50 EMA to be able to find where the trend is going and where market price is. So it does, it's kind of like Ichimoku cloud. Is it kind of like the same thing? Yeah, exactly. The Ichimoku cloud, obviously you have Tenkan-sen B and then you have Tenkan-sen A. So if I were to pull up the Ichimoku cloud, I know Raphael uses the Ichimoku, which is a great indicator. I've studied the Ichimoku. So if we were to pull out the Ichimoku cloud, we have the Tenkan-sen A and Tenkan-sen B. So whenever you're below, whenever you're below the cloud, you're in a bearish trend. And whenever you're above the cloud, you're in a bullish trend. And whenever you're inside the cloud, you're not supposed to be trading because it's consolidation area. You want to look for areas when you're below and above the crowd. So yeah, you're exactly correct. The Ichimoku is a really good strategy. I specifically don't use it, but I know a lot of traders that do use it and make a lot of money trading the market. So I try to keep my charts very simple. The reason why is that I'm really good at using structure, and through the program that we're going to be able to give you guys, we show you how to use structure and price to be able to formulate a strategy by using peak formations, W formations, M formations, and so forth. So going back into what I was saying earlier, the market is usually having these bounce off the 50 and the 200 moving average. So as you can see that the market here, it's bouncing. As here, it bounces again, and then as you can see, when the market wants to reverse, it kind of makes that, makes that M formation above, like right here, it makes that M formation, and that's when you know that the market is going to reverse into the other side. Okay, so you can either see it from a macro or a micro perspective. So as you can see that this is the micro perspective where the market comes down and it shoots down and then it makes another M formation, and then you can take into consideration that this is just one big M formation as well. So you'll see a lot of these in the market, and the reason why we use these formations is because they're so profitable, and they happen all the time. It's just when you find them, you have to look for these peak formations and look for when price is reversing as well. So it does, going back to the 50 and 200 EMA, the best way to trade is margin trading, or is it really depend on what time frame you're trading at? It depends on what time frame you're trading at as well. So like for me, I take my entries and my exits at the 15-minute chart, and then I'm looking at the hourly and the 4-hour chart to see where the trend is going, right? So for instance, if I'm looking at price, say that where price is right now, I see that there's a consolidation area, and I also see that there is a kind of a W formation here at previous lows, and it's making this bullish divergence where price is going. So if I go to the 4-hour chart, I can see that there's a bullish divergence on this chart where market price is showing lower lows. And if I pull up the stochastics, I can show that the market is considerably making a lower high. So stochastics are RSI, or stochastics is the same thing. So as you can see that this is making a lower low. Let me just drag this up a little bit. And then price lower low, and then price is making higher high. So then I know that the market buildup is going to be a lot more. Sorry, I gotta remove this. So I know that the market is going to bounce up. So all a divergence is, if you guys are new to divergences, is that when the market is showing the opposite of your stochastics or your RSI, that just means that it's in a divergence, that it's going to go the opposite way. So if your stochastic, so if you're showing lower lows here, but your stochastic is showing higher highs, then you know that it's a divergence and the market's going to shoot up to the opposite direction. So you only want to use divergence on higher time frames. So what I mean is that you can use the divergence on a 50-minute time frame, but it's not going to give you the same stability as it will if you use a higher time frame when the market is going to show you considerably more structure. So I hope that answers your question about using the 50, the 200 EMA, and then using what time frames. Whatever strategy you use, it's more you have more structure when you're on higher time frames. So like if I'm on the daily time frame, and if I see a M formation like we see here with the second leg a little higher, it's going to be a lot more valid than if I see it on the 5-minute time frame with a lot less it's just a lot less confirmation, because the 5-minute time frame is obviously going to have a lot more volatile spikes because you're going from a 5-minute time frame. If you want to have more structure and more stability, you want to go to a higher time frame, and then that will be able to give you more of a concrete trade hypothesis. Yeah, no problem. Glad to answer your question. So that being said, so moving forward, you guys, I want to go over the more key essentials on why price is obviously making these huge wicks to the high, because the reason why that we see a lot of formations in the market that have these swing lows and swing highs is because the market always has to retest a certain level, okay? And it's usually always a psychological level, like I teach you guys. Like what we're talking about here, we're on the Great Britain pound. So you see how the market was at this high area, what's that flat 13200. So this is what happens when the market is trying to stop out the buyers and sellers. They basically have two psychological levels that they try to basically open the trades, and then have an ability to see your trades right here. If you have a pending order for a buy position, they'll make these wicks happen where they'll open the spread, they'll enter your trade for your buy position, and then they'll hit your stops, okay? So what happens is that whenever this happens, when you say that you're taking the short position, they know that you're making profit, right? They know that you've been selling this for a couple weeks now, and then for them to make money back, to be able to be even on their books, they have to shoot price back to a certain area to have that established. So you see how they map, and they did another psychological level right here at 131,500. This is where the market bounced back to, and this is why it happens. They want to induce you into a short position and then hit your stops and then move price once again. That's how the market works. It's induce, hit your stops, induce, hit your stops. That's why I'm long on this position, because it's just a structure. It's a repetitive structure that they do all the time on all markets. So if we're going to Bitcoin, and if we look at cryptos for a second, we can see the same thing. So let's take out these drawings real fast, and I'll show you guys exactly what I'm talking about. So we see that the market does the same thing a little bit, where it says induce, hit your stops, and usually the way that you're able to know that this is going to be a downtrend is when you have price, the Fibonacci scale, from that swing high, whatever swing high that market is on, from that when it drops to that swing low, you put a Fibonacci right there, and then you'll wait for the next pull up on the upside, and you'll be able to short that market. So as you guys can see, that this is where the 160 or the 161.8 is at the Fibonacci level. This is where it shorts. Okay, so this is where a lot of traders can make a lot of money, because once you find these structures and know that how the market kind of moves, you're able to apply this and now make it now you're mastering the wave, because all of it is just you're going with the current, you're going with the flow, and having to find where the best breakouts and where the best entries are. That's where you can stay profitable. So when we're seeing these high formations up here, when the market just out of nowhere just takes a huge spike up to the upside, we automatically know that's not sustainable, because there's not any consolidation, there's barely any consolidation, and it's not making any formations to go higher. It's just making one swing high and then not even a swing low, just a huge consolidation, then another spike. Then you know that the market is not going to be able to sustain that type of an uptrend, just like it did earlier when the market hit that. Remember, it hit those highs at 20,000, right? This isn't a sustainable market. We only see one swing high and swing low on this market. Everything else is just skyrockets, and we know that's not sustainable because it's not giving a heavy flow. You see how the S&P 500, if you go on the market, you see how there's a lot of stability where it's just going up and down, but it's still in an uptrend, but it's not making like just elevator type movements to the upside. That's how you know that the market's not sustainable, when the market's just going up like an elevator, because it's by law it can't go up higher and higher and higher at that level. There has to be a huge fall, right? What goes up must come down, but as far as it's going up with no structure, the faster it's going to come down. So as you saw right here, the market just came up and then it just started to come straight back down automatically. So that's just something that we see on all different time frames. That's why I said these market structures are very universal. The market comes up and it comes back down, and it loves to test the same areas that it broke out of, just like we see on the daily time frame when we go to Bitcoin, or the weekly time frame, excuse me. It loves to test the same areas it broke out of, just like it's doing right now. You guys see the same thing? It came up, it shot up, and then it came back and test the same exact levels that it did previously. And if we go back to the 4-hour chart, it's literally the same thing as we saw right here, where the market came up, test down, and broke those areas. So this is really important stuff, and I'm really excited to show you guys how the market formulations work, on how it's just considerably over and over and over again the same repetitive formations in the market, and how they are able to apply it, and how they're able to form these different strategic structures that you're able to maximize. Because once you're able to understand these formations that happen in the market, then you're able to use a lot more leverage. You're able to use a lot more, because you have more structure, you have more stability consciously and in your strategy, and you've done your homework. So then now you can apply and use a lot more capital to enhance your finances. So with Bitcoin, say that if people are interested in knowing where Bitcoin is going right now, in my opinion, as of right now, we see that there's a resistance right here at this 17500. So as you can see, that 17500 is going to be a nice stabilizer. We can see that it kind of went a little lower here, but as of right now, I can see the market is still having that nice structure in pattern. So right now I'm looking for market price to go up a little higher. Maybe we receive 12500 once again before we see another hit to the downside to induce those buys to go a little longer, and then they're going to see maybe break this area. Hopefully we don't see Bitcoin break 3,500 because that is a huge psychological level. But if it does break that, then we are going to hit lower levels as of maybe even 2,500. But we might see a lot of consolidation in this area, just consolidating in between before we see maybe a breakout to the upside, or we see a breakout to the downside. So it's just about just staying really patient and seeing what different formations are being accumulated over time so we can be able to maximize on the potential profit in the market. So right here, I want to see that the market stay in this range between 3,500 and 4,200 to 4,500 for a little while before I see another breakout. Kind of like how we saw over here with this consolidation area, where we saw the market kind of just range in between 6,500 and 6,100, or 6,200, excuse me. And we saw that range area for a little while, and then it finally made that move to the downside. So we possibly might see the same thing right here, a nice consolidation build up before we see a breakout to either the upside or the downside in the near future. So I hope that answered you guys' question with Bitcoin. If you guys have any Zane W, good afternoon, Brenton. Hope all is well. Thanks for you guys. I'm more focused on the basics and have been much more successful in my trades and charting. That's so great, man. I'm so excited, and that makes me really happy. I'm glad that you've been able to use this knowledge, or studying and doing your homework. At the end of the day, it's your success. You're the one that comes and studies and learns more. So congrats to you, bro. That's amazing. I'm glad that you're able to see a lot more profit in using the basics, because the basics are everything. You can use all of these different strategies and all these different indicators, but you don't need them. At the end of the day, you can use basic structure, support and resistance, base, and like I said earlier, knowing where the market likes to retest. It always likes to retest previous highs, previous lows, and then knowing where the market likes to bounce off, right? Using these psychological levels, very simple, very simple strategies that will be able to amplify your trading altogether. Because once I got rid of all of the, the smoke and mirrors, I had so many different indicators when I first started trading binary options in early 2012. I was trading, I had the Fibonacci retracements, had the Ichimoku, I had so many different type of strategies. I was like, all right, I had like 20 different strategies that I was trying to implement at once, and at the end of the day, it just, it was just a headache, because I was just over trading, and I was just overthinking everything. So once you just break it down and you see that simple things like, okay, this is a peak formation low, we see the peak formation, and then now we see that this is a micro anchor leg, and this is exactly what we're seeing in AUD USD. So I'm going to show you guys right now. And once you see formations, you automatically can think of another chart that's happening right now, and then you'll be able to use it. So we'll see that, this is literally a breakout, and then we see this kind of head and shoulders, thinking that price is going to go down. So if you look at AUD USD, it's exactly the same thing right now, where price came up, and it's doing the same thing, where it's trying to make that head and shoulders, trying to make that, and then I put obviously that angular resistance from this previous structure, and I saw that it was basically bouncing off it perfectly. So then that's why I saw that this was a break and retest, and how monthly highs were just trying to induce these sellers to go short still, when obviously it's going to come up and raise price. I did actually get stopped out on this trade yesterday. You guys remember that I was in this trade yesterday, so I do lose trades as well. So this is take this one. I actually got into this trade yesterday, because I saw that before this was formulated, I saw that this was a resistance area. So I thought market price was going to come up into this area, and then bounce higher, and then actually made these stop lows, hitting this angular support. So, and another confirmation that I got was that these highs right here are showing that resistance. So knowing that this is going to be a major support for that upside. So this is what I'm going to obviously get back into this trade when I see a nice reversal formation in the candles, and we'll go over that as well, candle formations for reverses. And then yeah, so I do lose trades, you guys, and this was a trade that I lost yesterday. So if people that took that signal that I did on AUD USD yesterday, I apologize. I'm not perfect. I do lose trades. So I'm actually, like I said for you guys earlier, is that I'm usually not wrong in the direction I go. Is that I'm just too early, right? So there was one trade that I was completely wrong on, and that was the USD CAD last week. I basically had this position open for about a couple days, and I had it at I sold here obviously, and then I only gained about 60 pips, and then it shot up out of nowhere, hitting all the stops that I had earlier. So like I said, you guys, it's still, we still lose trades. Just because we know all of this knowledge and stuff like that doesn't mean that we're gonna always win all the time, right? It's just a high probability, and for some reason you got to go with your intuition, right? Like for me, for instance, on this trade, I felt like for some reason all the technical analysis told me that it was a short position, right? You see one stop to the high, two stop to the high, three stop to the high, and we see that M formation, and then you see this you see one stop to the high, two stop to the high, three stop to the high, right? But at the same time, for some reason in my gut, I just knew that this was going to break out to the upside, and I didn't listen to my gut, and obviously I lost that trade. So you kind of have to go with your intuition. Your intuition is your best signal indicator ever. If you listen to your intuition most of the time, you're going to be right. So you just have to be very, very cautious and very, very well-rounded as well. So you just got to be very aware of what trades you're going to get into and what trades you want to get into, because not every trade you're going to take is going to be a winning trade. That's why risk management is so important, right? You're not going to just try to swing for the fences every time, because you only have a limited amount of strikes, and if you strike out 3 times, you're out. So you got to be very aware and very cautious about what kind of risk and what kind of reward you're doing. You can't be taking trades that are, very, very, or where you're risking, 10% just to gain 1%. Like I've seen trades like that. You just can't do that, because you got to understand that your cash is literally your business. This is a business at the end of the day, right? So if you don't have any cash in this business, you can't do anything in this business. So it's very important that you guys use very good risk management and be able to find those good risk to rewards in the market as well. So Zane, both, you have changed a perspective and opened my eyes. I'm so glad. I'm so happy, man. Thank you so much for that. That really means a lot to me, and I really appreciate you being on here and using this information. It's really an honor to be on Traders Profit Club, and I thank Naeem over and over again for allowing me to be on this program and be able to teach you guys, because trading at one point for me was just a lonely road. I was just at my house studying 8-9 hours a day, just basically back testing my work and studying the markets. And now that I can be able to use this to be able to help other people, it really does make me happy. So thank you for that. I really appreciate it. Are you mostly utilizing Forex for your currency trading? Yeah. I mostly focus on Forex. I'm going to go into carry trades and maybe ETFs in the near future. I'm actually working on some things right now with my license, and obviously starting my own investment company in the near future. So I'm going to be obviously diversifying my portfolio and eventually be managing capital. So when I do that, I'm not going to obviously just be trading Forex speculation investing. I'm going to be also get into other sort. It's going to be currency based, but it's not essentially going to be just straight speculation spot Forex currencies. It's going to be a little different, because a lot of investors are not really into high risk, high reward type investing as well. So that's just a way that you got to have a diversified portfolio. You got to learn how to be able to maximize as much as possible, but also learn to take the long road as well, where it's not just you're going to get rich in a month or a year. Sometimes it takes a little longer, and a lot of people like that the slow process as well. It's a lot more sustainable for them. So whatever works for people and their trading styles, I'm all for it. I just say learn and study your work, and just have faith and have confidence in yourself, because most of the time you're right. You just tell yourself you're wrong. So a reason why I'm short in this position, you guys, and the reason why I took this position during this live stream is because of this. I saw that there was 2 bounce to the high, but I see that, like we talked about earlier, this is just a huge spike where there's obviously showing so much volatile movement to the upside, or momentum to the upside, where I know that it's going to have to retrace, just because this market just broke this previous high, where it just broke this area of structure of price. So knowing that, I know there's going to be a nice retracement, because I can see on the daily chart earlier I was looking at the daily chart on this is USD CAD, by the way, you guys, where I see that there is a huge information. And I see that this was barely an area that it broke, and then it had this huge wick, which is showing so much resistance that I'm like, all right, definitely this was the last leg of that bullish run. It just had a little more gas in its tank, and then now it's exhausted. So we're going to start to see that the bears are going to take over the market and come down to these areas. So this is my swing trade, you guys, for the week. So I'm going to post this into our Discord as well after this. This is going to be a good swing trade to take if you guys are swing traders. I'm going to just hold this position for a little while because I do see that the market showed that this was a support area or resistance area, excuse me, and this was a resistance area, and I see 1, 2, 3, and 4 spikes to the upside. So then I know that the market is going to retest previous lows and maybe hit that level of 128,500, and that's the level that I want to take profit at. So this would be obviously a hold for possibly the rest of the week, rest of the month. So I'm going to be looking forward to seeing this come into fruition in the near future. So I hope that answers a lot of you guys' questions. What kind of styles do I use? What kind of methods that I'm using in the markets, and why I trade, swing trade, and I day trade. Zane, can you break down pips, what pip are and how they affect your trades? Sorry if this is a repeat. Definitely a pleasure, benefits of part of the community. I can follow you further as well. Thanks, man. I appreciate it. No, not a problem. So we actually have so a pip is a percentage endpoint. So what a percentage endpoint is, you guys, is that this is one thing that's kind of tricky where I kind of have to break it down for you, and I want to break it down for you in as simple as way as possible. Is that a percentage endpoint is specifically a whenever you see these numbers on the side where it has like 133,239. So whenever the last decimal is less than or greater than, that's 1 pip. Okay, so if I go from 133235 to 133238, right? That's going to be 3 pips. So I want to talk about that, and I'm going to actually break that down, Zane, in a different video, because I'm going to actually have visuals for you guys, because that is one thing that you're going to need visuals for, so it does make sense. So I'm going to hold off on that one just until I have the visuals, and I'm going to set that up for the next live stream. So please bear with me on that one. I just want to be able to have everybody see that, and I'm not just everybody scratching their head at the end of the day when I'm trying to show them examples. So I really appreciate you guys being on this live stream today. I wanted to more so just kind of talk about the formations in the market today as much as possible, because the next segment we're talking about is going to be strictly how the banks and institutions kind of manipulate the market and how they flow, and we're going to go over the fundamental analysis as well, and how you can integrate those analysis into be able to integrate a really good profitable trading strategy. And we're also going to be talking about the Fibonacci retracements on how to counter trend trade the Fibonacci and how to find those support levels on the Fibonacci when you're trading on the trend. So that's going to be the next segment we're going to go on to. So I hope you guys got all that information on learning how to trade the markets and how to use the W, the informations, how to break down the levels of where market likes to retest previous lows, and how that these consolidation areas right after the consolidation area is a breakout area. So if you guys have any questions in the comments, I would I'll answer them at this time, and then from there we'll be able to go forward with tomorrow's video. Yeah, no problem, man. Of course, I'm gonna talk about it tomorrow, and also I'll have the pips. Basically, I'll have like a full segment on and I'll give you guys examples on like how a pip can work and how much like a margin is to what pip, and what type of like people want to ask what a micro lot is, what a mini lot is, and what a standard lot is. And I'm gonna have that all available for you guys so you guys can understand the specifics on what the market is giving you and how you're able to use these leverage lot size and margin lot size to make profit. So thanks, Zane. I really appreciate you asking that question, because I know I kind of go really fast into teaching people this stuff because I'm so excited and passionate about this. But I do need to remember that a lot of people aren't don't even know what a pip is. So I really got to remember that that is really crucial information for people to know, because once you understand what a pip is, now you can understand how much pips you can make and then take home to the bank, right? So really excited about that, you guys. And if you guys have any other questions at this time, I will answer them, and from there I'll be in the Discord group giving signals and answering any questions from there. So feel free to put anything in the comments as of right now. And oh, I see a setup right here. Actually, you guys, right here, I want to actually show you this. Got a little Hawkeye right here. So I did swing high and swing low, and I see that this is a nice area where the market retests the level, right, and made that swing high and swing low. This is a counter trend trade, because if you think about it, the market has been making this swing low, and then now the market has made this one bounce, two bounce, and made this third bounce to the Fibonacci level, and now it's retest this 78.6 level. So now the market is showing this consolidation area. So now market price is going to go down, and then to keep that bearish trend going. So that just made me really happy. So that is something that I really like to see. So really happy to help you guys out on this, and I'll see you guys in tomorrow's video. And be ready and get your notepads, because we'll be talking about a lot of great information. Have a great day, you guys. I'll be in the Discord group. The link is below, and I'll see you there. Have a good one.